As you said, we alluded to the idea that India and China, they're both very investable. I think India has more of a tailwind for the longer-term investor because we've talked about how Indian investors are the backstop. Every time you get some sort of bad news, some sort of headline news, and foreign investors move their money out, Indian investors get back in. And that's happened so many times. So now you have structural shifts of big pension funds, asset managers moving in and saying, this is now a core holding. I need 3-4% in my global book in India, which is what we've been doing for a while. And we think this makes a lot more sense. So that means we believe in the long-term investment opportunity, not just obviously the structural, political, and growth dynamics.
So, okay, I'm trying to frame this the right way. Is there more upside for the Indian markets from here, or is it just that the downside is limited?
It's more momentum. More momentum means you can ride this further going up, and we see that there is less kind of catalyst for this momentum to be stopped. So in China, could be geopolitics out tomorrow, and that could potentially change that. So you want to be nimble. In India, you don't have to worry about being so nimble because we feel every time there is a little bit of a stumble, we've had those local investors come in and support that. Now we've got local and foreigners come in. So it just makes for an easier trade to sleep at night.
But do you not worry about the kind of promoter holding there is? Somebody gave me a statistic on how 2/3 of the market, the mid-cap market, mid-cap, small caps that is, 1/3 of their overall ownership, which is 33% of the overall ownership of companies in mid-caps and small caps, is promoter-led, which means that there's actually very little float in the market. There's actually very little shares for the average person to buy, and that can be the recipe for higher volatility if there was a sell-off, and that's what people are fearing.
Yeah, and I think to that point, we need to understand that this means not go all in. And particularly for our investors who are based in India, we really talk about how diversify out. It should be a core holding, a great growth story, but you can't have everything in one place, particularly difficult when you've had such a great run-up. So we do believe India is a core holding, a growth story, but you want to diversify into 3 or 4 core holdings because there are still risks, there are still uncertainties. Currency's been phenomenally stable for a while, but that could change as the central banks really start diverging policy. So there's a number of different things we've got to look at, but in general, we think the longer-term fundamental FOMO is stronger with India than potentially China at the moment.